Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the SP 500 for Thursday, December the 3rd. Well, a red-bodied candle today, and in terms of the short-term dynamics, we have the bears in control now, and the bears are showing a fairly strong commitment to taking this market lower. The bears are keen, and the sellers have made some solid net bearish progress on the day between the open and the close. We can see on the top that we have a shadow and we have downside price rejection from this area of resistance from the top of this pattern. This is a rectangle pattern, and this resistance has been tested on 1, 2, 3 and now 4 occasions, and we have the market trading down towards the support area of this pattern. Well, we still don't have a change of trend in this market. We still have a higher high and a higher low, and in bar chart terms, today's bar was an outside bar, which raises doubt about the strength of the first time frame uptrend, which the market is in, but in a bigger picture, the market is within this congestion area. Some may be tempted to call this a bearish engulfing pattern. The trouble is we really don't have much of a trend to reverse here. We have a trend of only 2 days and a fairly small body candle, fairly small ranges, and the market is trading within a larger range. So technically it's not necessarily a bearish engulfing pattern, but the implication is the same though. The fact that the market, the body of the current candle has completely engulfed the body of the previous candle does have implications for the trend to the upside. So we need to keep an eye on the low of the current candle for the potential for the market to retrace back towards this support level. Now the market is trading up above the cloud or the Kumo, and is trading up above the Kijun-sen, which means that the market has an overall positive bias and is bullish in the medium term, but the market has closed just at the Tenkan-sen, which means in the short-term time frame the market is quite neutral. We can see that the market has been oscillating above and below the Tenkan-sen, which means that we have a market that's moving around this equilibrium area and trying to find that equilibrium, and the market is in equilibrium at that point in the short-term time frame. Interestingly, the Kijun-sen has ticked up, and that means that the market has tried to build some upside momentum. So there is still a possibility that the market could break out to the upside and continue the trend in a bigger picture. And trends, they will move in this pattern where they'll trend and then they'll congest, or they'll be in disequilibrium and move into equilibrium. So the next move will be a disequilibrium move or will be a trending move. So we need to watch for a potential breakout potentially below the support of the current pattern. If the market does break out below, then there's support at 1080, which is the previous resistance level, certainly at the Kijun-sen, and then at the top of the cloud and anywhere through the cloud. So there is solid support all the way down through here. There is also potential for the market to break out to the upside, and if we see a solid bullish close up above this roughly 1120 area, then the market has the potential to trade up to 1133. Remembering that the trend is still up in the first time frame, so there is that possibility that the market can trade up. So the high of the current candle becomes very important for the market, the low of the current candle, and this support area that the market may retrace back to over the next few days.